checking in with Alan Nuckman, the Chief Market Strategist. He's got our morning trade. We've talked MICRON this morning already, Alan, because the stock's been getting beat up. There's an analyst out that's pretty hopeful on it with the message this morning, but still near the one-year lows hanging out at them. So what draws you to this lagging chip business?
Exactly. You just made my point.
That it's a lagging chip business.
I hate to repeat myself, but I think I do almost every week. So we're in a bull market, and you're in a buy the dip strategy has been successful now for many months, many years, and now a decade. So this is another great example. Let's talk about last week. All right, we have to talk about last week first. That's huge. It's not how the markets act, it's how they react. And when you saw the S&P come back in positive on a weekly basis and only down 2% from its all-time top, again, that's very bullish, very positive.
Okay. Now, what about the drop we get in NASDAQ whenever there's a move higher in yields? I mean, Alan, haven't we done this story before? Does this always a dip buying opportunity, or does it get complicated when yields go up? Walk me through the way you're thinking about that right now.
Okay, first off, yields are going up. Even the dot plot against the futures market comparison, we're still not getting rates rise until the end of 22.
Wait, hold on. Just say yields aren't. I'm looking at the highest yield since June.
I'm talking about what the Fed can control. We're still at extremely, extremely low levels. Money is almost free still. So until that equation changes, I don't think that has impact on the market. Now,
all right.
You talk about the tech sector. Every time there's a dip, it's come back and it's rallied the distance of that drop on that old high. So until it doesn't, we have to go with that plan. So I'm still very optimistic. If you look at the NDX, the Tech Top 100, it's up nearly 20% so far this year. And it's, again, 2% for the top. But if you look at Micron, Micron's unchanged, actually a little bit negative for the year, and it's 25% off the top. So, again, it's about risk-reward. This stock made its high in April, and it's been trading between 70 and 90 for 8 months. And now it's even consolidated more around this 70 level, which is the midpoint pivot for the year. So it's a super, super support to lean on.
Okay, so one-year chart, we're right in the middle. Year to date, as you mentioned, we're down and sitting near the lows, but after the big rip we got in the second half of 2020, you're saying this is now retraced about half of its gains. Time to bet that it's going to claw it back. And how far do you want to go, Alan? Are you doing your buy in the money and kind of stock replacement approach?
Of course.
Okay.
On board, you see it. So instead of buying the stock and tying up a lot of capital, we could buy in the money options and act like the stock. Now, another point about last week is volatility declined 15% last week. That's a big drop in the VIX. So you can see options are cheaper in relative terms than they were just a week ago. So I'm looking at a December call. December gives us plenty of time. It's 3 months of time. Instead of buying a 2-month option, spend a tiny bit more, buy a 3-month option. The 67.5 call is below that 70 pivot. It's got 84 days of time. It's got a delta around 75%. So there's a lot of positives here. Again, it's a limited risk strategy to ride through any ups and downs. But again, like price, you want to buy volatility when it's low and extend your time frame to be successful.
Okay. All right. 67.50 calls. Micron right now trading 75.11. Looking for some upside and to claw back these losses that have been going now for months. And then, Alan, if this thing doesn't start to move, how do you manage your trade when you've got this approach?
Again, limited risk option. Your premium could only go to zero. Sometimes people put in a stop loss at half of what they pay because if the market moves the other way or you're running out of time, your option will decrease in value. But again, it's an in-the-money option that has intrinsic value. I want to say one more thing about this stock, and I know you're a fundamental guy. It's got a forward PE of 7. So it's cheap in a lot of different ways, and it's about risk-reward, and I like it at these levels. This chart looks fantastic if it holds this 70 and has tested the downside and rejected it time and time again so far.
Okay. Micron always looks cheap, though. It never gets double-digit PEs, but hey, I hear you, even after the big run from $40 last fall, almost like $42 at the low, thing still only trades like a quarter of the S&P 500? Okay, maybe like a third. Alan, thank you, sir. Chief Market Strategist at bullseyeoption.com with the trade in Micron to the upside. And, of course, as a reminder that dips still are getting bought. When we come back, let's talk